Joining me live is AMP Capital Chief Economist Shane Oliver. Shane, thanks so much for your time. So the heat seems to be out of the Australian housing market for the moment, and it may be because of the interest rates that we've seen over the past year. CoreLogic's latest data shows Melbourne house price values declined 0.3% in December, and Sydney seems to be levelling off. Is this trend going to continue of a softening housing market in Australia in the first half of 2024, do you think?
I think it will, Kenny. I think we're in for a year of two halves in the housing market. The first half is likely to be soft as the impact of those rate hikes and high interest rates feeds through, and possibly also higher unemployment. So it looks like to me we're going to see more downside, possibly with prices coming off, particularly in Sydney and Melbourne. Other cities, Adelaide, Brisbane, Perth, less vulnerable because they don't have the same affordability issues, and the level of listings in those cities is far more subdued. But through the second half, as interest rates start coming down from the Reserve Bank, it should start to support the property market again and then start to see a reinvigorated upswing. So it's certainly been a messy cycle for the property market. It fell in 2022, rebounded in 2023 as immigration levels went through the roof, has been softening in the monthly data recently, and that rollercoaster ride will probably continue for a while yet.
You just touched on it then, but I just wanted to expand on it a little bit more. Do you think that Sydney could be one of the worst performing capital cities in terms of house price growth compared to others? What cities were likely to have the most gains in 2024, do you think?
Look, I think we'll probably see continued strength in cities like Perth, Brisbane, to a lesser degree Adelaide. Those cities obviously benefiting immensely, or at least the first two benefiting immensely from interstate migration. In other words, people moving from Sydney and Melbourne and going to those other cities. And also they don't have the same affordability issues. Now, of course, they're probably going to see their gains slow down from what they saw in 2023, though. Now, of course, at the other end of this spectrum, you've got Sydney, which has very high debt levels, very poor affordability. It saw a good rebound through into the middle of 2023, but it's now starting to slow down. And of course, Melbourne has actually gone negative. We've also got 2 months in a row of falls in Hobart, and Canberra is a bit on the soft side. So it seems to me like Southeast Australia and New South Wales, of course, are going to be the weakest, whereas other parts of Australia are probably holding up reasonably well.
I just want to get your thoughts on inflation. Should the government do more than the one-off payments to 5 million households to reduce power bill cost of living pressures? And if it does, could it potentially add to the inflation issue that we're seeing?
Well, it's a complicated one. Look, to be honest with you, I would hold off at present, give it some more time. We have seen a fall in wholesale prices. There's even a fall, reports, I was looking at some of today's papers, of negative wholesale prices flowing from the huge surge in rooftop solar energy coming into the grid in parts of Australia. So right now, I would probably hold off. I think we are going to see when the numbers unfold this year that retail prices may come off a little bit. So therefore, I don't think there'll be a need for further energy bill relief. That said, the best time to review this would probably be in the May budget or thereabouts. So right now, I don't think there's a huge urgent need to do it, but obviously it's something worth keeping an eye on.
Just on the stock market, I mean, it's been doing quite well in the past month or so, but we may be due for a correction very shortly. But is it expected to be a volatile year, considering that major elections around the world, like the US elections, are coming in November? Does that cause wild swings, do you think?
I think it probably will be a pretty volatile year. We've seen this huge run-up out of those lows in share markets in October. The US share market rallied something like 16% into year end. Our market rallied something like 12% just over a couple of months into year end. So right now we're somewhat vulnerable to a bit of a pullback. And obviously there's tensions in the Middle East with the Red Sea and so on, which could give us that pullback. There's also uncertainties about when central banks will start to cut interest rates. I think they will, but we may go through a month or so where they indicate it's still a fair way off before they do that. There's obviously risk of recession in Australia and globally, uncertainty about the Chinese economy. And as you mentioned there, we've got lots of elections this year. Something like half of the world's population will face an election. And that, of course, includes the US. and the US is the big one in this, where you could see a bit of volatility around it. That said, if you look at the US share market, it normally does okay in election years, particularly where a sitting president is seeking re-election. Who knows how precisely this one will turn out, but I think it will be a volatile year. But as central banks start to cut interest rates through the course of the year, then I think that will ultimately underpin markets, even though we're probably going to see volatility along the way. Out of interest, our target or our forecast for the ASX 200 by year end is around 7,900. Of course, of course, those targets can be blown out of the water quite easily.
Yeah, it's all dependent, isn't it?
From here.
Yep, all dependent. Shane Oliver, good to have you on. Thank you.
My pleasure. Thank you.